Hey Scott, how's it going, buddy?
Good.
Hey Jamie, how are you, my friend?
Andy, Scott, greetings.
All right, all right. Well, thanks everybody for coming to Andy's Trading Studio with Jamie Hodge, and we're going to get underway in just a minute. But I did want to thank you for taking time out of your day to come join us. Um, let's just move on. Let's get over the disclaimer here. A little quick hurdle. We can take care of that real quick. Once again, guys, this is for educational purposes only. Nothing that you see or hear should be construed as investment advice, and if that's what you're seeking, look for an registered broker, advisor, somebody who hangs a license in their office. But we're going to have some fun. I think you guys going to enjoy today. Uh, Before we move on, guys, I want to talk about the five-star support, education, and training that we have here at Trade Ideas. You regulars, just bear with me. We'll get through this pretty quick. But we do have a lot of people that come in here and want to check out and kick the tires, and I'd be remiss if I didn't tell them, what they get along with this real powerful software. And what you get, guys, is basically webinars throughout the week. Every day we're having some sort of a webinar, and soon we're going to be having multiple webinars in every day because we're going to be changing over our training program. Get into that in just a minute. But we're going to be Monday through Thursday at the 5 Eastern time slot. You can come in here, and as long as you're subscribed to the webinars, you will get an invite, and you can attend these webinars throughout the week. And it's usually a combination of myself, Jamie, and Steve, but on Wednesday we throw you a special treat with our CEO, Dan Merkin, and Brad Williams. He does a lot. He wears a lot of hats, so I'm just not going to call him or something. But and then Friday support session, guys. This is very important because it's also open to non-subscribers. So if you want to learn more about the product, come tomorrow at 11 Eastern time. We're getting more and more people in that room. We spend 3 hours showing everybody the product. I was talking to a guy today, and he just didn't know a whole lot about it. Want to learn more? I said, just come check it out. You can come ask all the questions you want, and we'll answer them for you in the same format as you see here. And plus, let me not forget the traders room with Barry. He's been at this a long time trader, a good one. You get to look at the software and listen and watch him navigate the market using the software. And there's a lot of good traders in there, 600 plus guys. So it's a great hangout, and it's free once again for everybody. So a lot of resources here at Trade Ideas. So let me talk a little bit about the sign up for training. Right now, you still get a free one-on-one training when you subscribe to the standard or the premium package. Now, we are growing in such capacity that we're no longer able to fulfill with the traders we have here. We're not going to let anybody, do training at Trade Ideas. That's why you have to kind of have a background in professional trading and software, and that's the way we like it, and that's the way we're going to keep it. But we're just getting too many people come on board to do one-on-one trainings very much longer. So you can still get it and sign up now. Once you subscribe, you may have a little waiting list. That's okay. That's why we have those Friday support sessions. So while you are waiting, you can come in there and learn a lot. But for right now, guys, you can still sign up for the one-on-one training when you subscribe. Real quickly, a Brokerage Plus, if you're interested in taking your strategies, or you're kind of an advanced trader and you want to automate your strategies, we have a module we call Brokerage Plus that connects to Interactive Broker and allows you to do that. If you want more information, just go to tradeideas.com/beta. All right, let's go over our agenda today. We're going to talk about the market recap, or kind of our structure here. The first two that you see, the market recap and then the Holly recap. And excuse me, guys, I should have taken that off. Oh, let me go back. Sorry, this is from last week. I forgot to take that off. We're going to talk about the market recap and Holly recap. She wasn't all that quiet the last couple of days, so that was just left on there from last week, and I apologize. And then we have a new alert that I built for you called Weekend Shakeout. I think you guys are going to like that. We're going to kind of go over it slowly start from the basics so you guys can kind of get it in your head how to build an alert, how to kind of optimize it, back test it a little bit. So we're gonna dive into that a little bit. I know that's always exciting for a lot of you guys out there. And even if you're new, you're going to see the power of this software by as we go into the back testing module. And then if we have time, guys, we're going to do some chart request. So let's move along here. Let me get out of this, and we will pull up the spiders. That's what we normally take a look at. And let's see what we got here, guys. Well, we have a rubber band that was plucked really, really hard. It got way extended up here, and then boom, it came back down, and now it's kind of reverberating back toward the center. We're going to have to see how this plays out. If you look at the spiders here, we've gotten, through the 10 period. I know Steve and I we're talking last week that we thought was maybe some trouble here, but man, I'll tell you, there wasn't really a whole lot of trouble there. And then you saw with the 50 today, kind of opened up right around it, sold off real hard, and then came back and closed above that 50. We do have kind of a little trend line here. It's not a well-established one, You really need a little more, I think a little more time to get a really well-established trend line. So I just drew this in here earlier today to see if we can get through it. And then I looked at the Qs, and I'm like, wow, it's already back through all its averages. So boy, I was thinking, well, I'm not going to think too much, because as traders, you're not supposed to think when it comes to, I shouldn't say you shouldn't think, but but your better traders react versus think. It's okay to anticipate, but don't don't try to predict what's going to happen, and be more reactionary. That being said, guys, I mean, there's still a lot of work to be done. I mean, I'm not going to go back and say, oh, that's buy the dip, we're going back to highs. I mean, there's still a lot of technical damage here. You still have to get through the 20, a little bit of a trend there. There's so many possible scenarios right now that I'm not going to, I'm sure a lot of people are thinking, oh, here we go, back to highs again, and I wouldn't be surprised. We've been doing it for 9 years, but at the same time, I know, there's still some technical damage to get through, and we very well could be range bound for a while. We obviously have a very wide range now. If you want to look at it by drawing there and down here, basically, when you have this kind of volatility, you really stretch out your boundaries, and that's exactly what we've done here. I'm going to leave this in here because I think that could be some headwinds if we do get up here. That's what we call a pivot level, pivot point, whatever you want to call it. But I'm going to leave that in there. But you can see right now we're just we're right in the middle. Pretty much, you've had this huge, stretch, big stretch up, going up for years. Then all of a sudden we had a break, and a pretty serious. We broke a lot of trends. And that's another thing that kind of I would want to see something set up for a while is man, all the trends were broken on this downturn right here. You can see it bounced right off the 200-day moving average. We're right in the middle of this range now. So we've pretty much stretched one way, came back real hard, the rubber band, basically coming back real hard, and now we're reverberating up to the center here. And what your guess is as good as mine. I think it may take some time to play out, but we'll see. Diamonds are kind of pretty much like the spiders there, very similar. IWM, yeah, not as strong, but yeah, pretty much the same. It's still below its 50 though, but by far the Qs are the strongest, and big pivot level right here. We'll see what happens there, and look where our technology draws the target on if you were to buy it. The Qs right here, right at that pivot level, and that's that could be some headwinds. We'll see what happens, and like I said, it just may take time to play out. That doesn't mean, that's what's great about our software. Even though the markets may be kind of in a range bound and get funky, I don't know, but you can still find opportunity, and we find it all over the place. Jamie, I'm drawing on my. What do you think, buddy? You any words of wisdom you wanna add on this price action?
Yeah, I mean, just that song "Stuck in the Middle" comes to mind, right?
Oh yeah, yeah.
But hey, this market looks resilient, if nothing else, especially with the wicking daily closes as well. Of course, we're not in the business of reading the future, but whether we go sideways for a little bit, hey, there's still going to be great trades to be had. Whether we go shoot for the moon and try to get back up to the tops by the end of next week, there'll be good trades to be had.
Exactly.
So of course, you always hear people say, well, we've got to have a healthy correction, and of course everybody agrees. Yeah, it's got to have a little, a little correction so that it can move higher potentially. So maybe that's what we're getting. Maybe this is the start of a new trend. We just don't know yet, but the volatility during these times should provide plenty of good trading opportunities. I mean, kind of like what we see with Holly, after these big down days and those wide range bars and putting the bottom in. It takes a system like that several days of incorporating new data to to give the system more information to work with. And so I've been quite impressed with Holly's performance over the past several days. And of course, might be getting a little ahead of myself here, and we'll talk about that when we talk about Holly. But the number of strategies that she came to the session with today was, getting back up to the 10 and 11 strategy, which means she's seeing more opportunity. But we'll get into that in detail here in a little bit. But interesting things that are happening as these moves occur.
Very good, Jamie. And while we're on that topic, I thought. And I was somewhat surprised, even looking at where we opened up yesterday. As we came into the market, Holly was pretty much loaded with longs, and that's all she took yesterday was longs. And I was like, I was expecting maybe some more bearish setups, but and obviously she is equipped with more long strategies since she is short, but not to where the numbers were skewed yesterday, but yet lo and behold, and then even today you did have a couple of shorts in there, but the majority of them were long. And yeah, there's oh yeah, I was going to, yeah, Jamie gave you that, Kevin. Jamie, come to that tomorrow, come to that 11 o'clock Eastern time support session, and we can, like I said, it's 3 hours long, and we have a lot of time in there to spend helping you build alerts.
Yeah, that'll be the perfect timing too. Yeah.
All right, Jamie, if you guys don't have any questions, about the overall market, I think it's a good time probably just to let you take over the helm and maybe go over Holly real quick, or anything else that you might want to chat about.
No problem. Let me grab the time here.
Okay.
All right.
I got you. Look sharp. Got the black background going on the spiders.
I just decided to try them out, and hopefully everybody can see them okay. But mine looking very similar to what Andy has going on there, except I'm just displaying the darker background. Easier on the eyes, in my opinion. But anyway, just looking at that S&P chart again, it's almost just like, wow, such a perfect bounce off that 200 and those wicks. Market seems very strong, in my opinion. We'll see what happens. Okay, let's talk about Holly. And of course, she did come to the party today with quite a few strategies. I believe 11 total. Let's count them up one more time. 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, 10 and right at 11. And 3 of those were short. And kind of high trade count today. We can see here, what was it, 20, let's see, 9, 12, 15, 17, 19, yep, right at 21 trades. And not a bad performance, but she really had to throw a lot of things against the wall today to get the good ones to stick. Nice kind of distribution here between the strategies that did fire. And of course, we can see down here, none of these guys even came into the picture today. So we had a little short, a little long, mixed bag of things here. We can see the entire trade blotter, which is a little bit heftier than what we've been seeing as of late. And we can see out of those total trades, only 4 were short, Small winners, small losers. Probably the biggest damage today. You know, the matter of fact, the only stop that got hit. Let's just take a look at that one and let's take a gander here at the short trade. So yeah, shorted right here, and then just kind of happened to be the bottom, and then turned and burned, and the stop was hit. That's the only stop out. Now, a lot of trades today and a lot of fluctuations went on in the risk on blotter today, as we can see here. I mean, we were underwater. If you were just buying everything and holding it that Holly spit out during this drawdown period, you still weren't down even quite a point total. You know, we're bordering on the 88-cent level, so that's 80 some odd cents there. Not a huge drawdown when we're talking about drawdown standards. And then, of course, depending on how risk tolerant you were today, if you were going risk on, eventually came back to even and had a really nice run pushing the $1.80 level, and then a very severe fall off at the end there. So interesting observation on the risk on. And once again, Andy and I were talking about this before we started the webinar, but once again, in the future, hopefully we're going to have bigger charts that we can see here, because this activity that the AI was engaging in, you know, seeing the opportunity, maybe the timing was slightly off. Of course, there's probably going to be a correlation with the market move and the SPY taking its little dip this morning, and then before it got traction and went on to set higher highs there. So interestingly enough, in the future, I've been doing this already, but as we get the ability to scale these charts up a little bit more, maybe draw some lines on them as well, when you see the AI, in essence, breaking out just like a stock would, well, then that gives us an idea, hey, things are changing. Maybe I should be a little bit more aggressive with the plays that come out after this point. So just some food for thought for you guys that have been using Holly for a while. I know it might not make a lot of sense if you're seeing Holly for the very first time here. But the risk off chart, nice progression on risk off today. Now, quite a few trades to get to this level here, but of course, the numbers that we're seeing here can't tell us what all happened while the trade was on, how much it could have been up. And that's why we're going to go over some risk on trades here in a second, but that's also why I like to have this little guide displayed. Max profit, and this is only during risk off period. So how much the stock was up while she was in it versus how much she actually took. So in this example, FRC was up 40 cents at one point in time. By the time she decided to get out, only taking a 13-cent profit. So out of these 21 trades, you know, ask anybody out there, did you put on 21 trades today? Maybe, maybe not. If they did, were all of them in the money at some point in time? And we can see here, this is the worst one, which was never in the money, ended up being a 7-cent loser. Even if we eliminate the guys under 10 cents, that's still an impressive selection of stocks. And this is really what people lose sight of a lot of the times, is that these guys were statistically weighted to begin with. So having the luxury to go, okay, I like this chart, you know, I'm going to go ahead and set some stops here, but I think this one's good, take a little bit more risk. As you go about this process on a trade-by-trade basis, it'll just become second nature. But I haven't been watching this column as much since I came back from the holidays, but then again, I remembered it. And of course, we always see this type of activity. Not all the time, but a good majority of the time. So just some food for thought there on all the trades that are being generated from Holly. Another high quality information stream, just like any other window, but completely unique in the fact that it's a statistically based system. So let's take a peek at some of the trades here on risk on and kind of go over, you know, the general idea of what it is, how to interact with it. So ATNX. For you new people out there that might be seeing this for the first time, when I double click from Holly's blotter, it automatically paints my chart up for me. Here's the entry candle. The blue line corresponds with where she called it. And of course, we can see took a little, sideways action before moving higher. Now, why did Holly get out of the trade? We can always see that by looking at the risk off exit column. On this particular trade, timed exit. And by the way, look at all the timed exits today, which simply means profit target never was hit, stop loss wasn't hit, timed entry came up, and so she did what she's programmed to do. So on ATNX, buyer stepping in, that guy is configured for a 60-minute intraday hold time. So 60 minutes expired, she got out. And then of course, we can see as soon as she got out, what happened? We had to move higher. So when you see Holly getting out of the trade, and of course, this is where we come in, the human, and the human working with the machine, which is always the best scenario. We see Holly getting out, and we think to ourselves, we just got this sideways action here, and we're in the money from a nice little bit here, and we're thinking, well, this tells me that buyers and sellers are equal at the time. So if you felt comfortable with this nice little sideways pattern, you could always peel out a half with Holly, maybe keep the other half, say I'm going to accept more risk, and of course on this one you would have gotten paid a little bit more. Now the spread, we got 14 cents versus 37 cents. So the idea is just to extract a little bit. Maybe you get most of it sometimes, but top ticking is nice, happens every once in a while. But a big difference, over a 2x value between 14 and 37 cents there. All right, so I'm just keeping an eye on the questions panel.
Yeah, I'm also
connecting a chart to a Holly window. Well, everything's connected already, so as soon as we double click, assuming your chart is linked, it's automatically going to populate up there. So as long as the chart, if we come over here to properties, as long as you have it checked right here with symbol linking, then anytime you double click on a Holly trade, then it's going to automatically populate and put all the applicable data on there for you. Okay, Graham, and you know what? I'm probably going to say no on that. I don't believe we have closed caption. We can ask Scott that at the end of the webinar, but
it doesn't.
Okay. All right. Don't even know if that's an option with the software, but we'll look into it. So anyway, 14 cents versus 37 here. Nickelback kicked out this PFSI trade, which we can see. Entry right here. The shaded area, once again, is Holly closing the trade out, once again on a timed exit. And then we had more updraft here as well. Now this little guy right here, Holly just got a little tired of being in the trade, because this logic right here, getting back to the reasons why Holly gets out, we got stop losses, profit targets, timed exits, and then of course this little guy right here, reduce risk. We can see Holly's entry right here. Of course, here's our hard stop way down here. She gets into it, we're up a little bit, peels off, starts to come back up. The longer she's in the trade and it's not doing what it's supposed to, and she can exercise that right to reduce the risk and get out. Now, once again, hard stops are there for a reason, and it's part of everybody's routine. So if we see this little bounce put in and then a regression, and then we see Holly get out, we could be like, well, we saw it came down here and sellers couldn't keep it down, it pops back up, maybe I'm going to give this a little bit more time, or just make this decision to stick to your hard stop loss. Once again, most of the time, we don't see a lot of stops hit. Now, not too long ago, we went through a period where more than normal were being hit, but stop hits, for the most part, they're usually a minority, and of course, we can see today was the perfect example. Now, in this case, she reduced the risk and got out. We could have easily stayed in there, maybe reset our stop loss. Everybody's a little bit different. But had we stayed in there, we would have, and of course, my eyes would have been up here the whole time, because if we stayed in it and it came up here and penetrated this level, Well, that either gives us confidence to remain in the trade, or sometimes this would be a great opportunity to add to a trade because we're just getting that nice little range break since the open, and we already know the statistical probability was behind us. And then the last reason, a profit save. Holly can get out of a winning trade before the timed hold. So on this little guy right here, she took 13 cents. I'm looking here, oh yeah, 20 cents. So only an extra 7 cents was left on the table, but that is the one that she exercised profit save on that guy right there. So there you have all the reasons other than the stop loss and the profit targets being hit. And by the way, profit targets are also the other rarity. They show up sometimes, but most of the time that profit target is not getting taken out. So Andy, any other things that you want to point out today? And of course, I'm going to hit on this topic too because somebody out there might be thinking about it. So I'm going to go ahead and talk about it.
Sure.
We did have this little guy show up on Holly today. And of course, when we look at a stock like this and we see this chart, we're like, I don't know, not really something that we look for. But just keep in mind, all the stocks Holly pumps out, all the trades every month, very rarely does one like this slip through. But I just kind of want to address it. Doesn't matter what your system is. Every once in a while, a thin one's going to slip through. Doesn't mean it wasn't tradable. I really wasn't looking at this one today to see what the liquidity was like. But, when you look at the number of trades produced, they're going to slide through every once in a while.
Jamie, if I know what threw that off. If you look at the daily chart on there, and you'll see a volume bar going back about right there. Mm-hmm. That will throw the skew the volume. So in other words, a stock that may normally do 50,000 shares, if you're using a 10-day, say a 10-day position or the average daily volume on a 10-day, then you have this one huge candle that throws off the average. That's going to throw off some of your settings where it makes it, in other words, it made it eligible for this strategy today, and when in reality it probably shouldn't have been. Just that one volume bar kind of skewed it, I think. But
and by the way, it's just like, once again, any of your other windows, sometimes a thin one slides through, you look at the chart and you're like, ooh, bye-bye. So in any case, and I see your question, Raul. That is coming down the development pipeline, but it is not ready yet. The question was pertaining to the ability to auto-trade Holly strategies with Brokerage Plus, which right now you can auto-trade your own strategies, but there's no way to get Holly strategies in there. That is coming down the pipeline. There is no ETA. But it is being worked on. Mm-hmm. Okay, and for Brett, I'm going to roll back around here and go over risk on versus risk off one more time, just to help clarify.
Sure.
So we'll just use the old ATNX advantage trade again for this example. So once again, I double-clicked. We've got the populated data over here. So this green square right here, this is Holly on risk off mode, which is basically Holly just obeying her rule set and acting like me, you, or any other trader, which is, okay, assuming this is the thing that I want to trade, I make the entry, I set my stop loss, I have an idea of my profit target. Maybe I have a timed hold as well, but every trade has a timed hold from Holly. So in other words, if it goes down and you get stopped out, so be it. If the profit target gets hit, so be it. She's obeying her rule set, right? Now, when we see Holly obeying her rule set and exiting, we can then look at the chart and go, do I want to get out yet? Based on my human eyes and my technical chart reading abilities, do I feel comfortable staying in this trade in hopes of making more money than Holly did? If the answer is yes, then you've chosen to go risk on either the entire position or maybe half. Maybe you get out of half with Holly, stay in the other half, and of course manage that risk accordingly. Maybe you give it a stop loss back down to break even, so that if it rolls on you, you flatted it, or maybe lost a couple of pennies, but you still made money on the first lot. So in a nutshell, risk on is you deciding to stay in a trade when Holly is exiting because you think there's more meat left on the bone.
In the raw definition of the histogram that you see over there, basically risk off is just taking all of Holly's exits for whatever her exit reason was, and risk on is basically just holding every trade till the end of the day.
Right.
So,
and you know, it would have been a nice little roller coaster ride. You would have been down almost $1, boom, 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 almost up $1.80, and then all the way back down to flat again. I mean, hey, how many times have you had a trading day like that, Andy?
Yeah.
You start off in the hole and you fight like mad to get flat and go, oh, I only lost $100 in commissions. And of course, we always asked ourselves, why can't you just trade like that from the very beginning? You figure that out, you'll have the holy grail. Okay.
Very good. And Raul, I want to say this, and you're right today. Some days I remember telling Jamie, I think I told Jamie and Steve, I said today it wasn't much to write home about, when it comes to Holly. She was consistent. I mean, and I was impressed that she had a lot more winners than she did losers. It was a big gap up day and that sudden jerk down, but it was kind of but at the same time, she's the last couple of days she's had some great trades, and you're going to get some like this. I mean, not every day you're going to have 3 or 4 banner days like she did on Tuesday, for sure.
Yeah, but other than that, I mean, considering once again the what's happened to us today, it didn't feel that crazy, as a trading day. It felt pretty calm, and Holly found a lot of opportunity. It was just, I guess the best way to describe it is it was fleeting. It didn't stick around for very long, and just the ebb and the flow was a little bit weird. Probably because all the steam, a lot of the energy got taken away. But we filled it. We filled it, and then we jerked right back up. And of course, we can see there it is on the daily. Of course, when we were down here, what were we doing? We were just bumping right up against, the prior session's close.
Correct. And remember, she's not coming in holding any position. So the net change on the day, I mean, when you conclude the gap, it was a great day for the market. But from where we opened up, there wasn't a whole lot of movement from. You can see the little green body there in the candle. Wasn't
the gap does throw a little,
kink. Yeah,
dirt and cogs. It's kind of like when I talk about compare count readings, which, by the way, today, they came out about 15 minutes past, just FYI, Andy, heavily weighted to the downside. And of course, these opens right here are really good for that. If they're all stretched out, it kind of skews those readings. But of course, we had that nice little plunge down and then a recovery, which was a very interesting correlation, I thought, today. So looking at the time here, Andy, and I think it's probably about time, because I am also interested in seeing the new that was created by you today.
All right, give me the reins and we'll dive into it.
Yeah, let me go to meeting. For some reason just likes to shrink all my panels up, but I think I can do it. There we go.
Uh-oh. Okay. There we go. All right. So guys, I get a lot of these ideas when I'm doing one-on-one sessions or working with people, maybe in our chat on the web or something like online or something like that. But this was one I did earlier in the week that I kind of worked with somebody. I gave me some more ideas of how I could even tweak it more, and started to do some back testing and optimizing. And I think you're gonna like it. So let me just pull. I'm gonna pull the raw footage over here, the one that I just built off the top of my head. So here's what I'm looking for before we dive into the filters and things. I was looking for stocks who had the prior day had a big move up, like let's say over 4%. So it had a big, really strong day the prior day. And what you'll have a lot of times when and on stocks that have a big move up and close up 4, 5, 6% is the next day you have people coming in who held that stock and they're just hoping that it'll keep going. And then you'll have what you call a shakeout. And this is why I call this weekend shakeout. So in other words, they try to shake out the weekends. So I wanted to create something and say, well, how am I going to do this? Okay, let's go ahead and start jumping into the configuration. All right, for alerts, I was thinking I want to see something in a 5-minute move. So, because if you're going to have a shakeout, you know, if it's just kind of nice and orchestrated, you know, you may not scare anybody out. But if it has some action, you know, in a 5-minute period, you might get a good shakeout then. So I decided I was going to use a 5-minute low. And there's my alert, 5-minute low. Okay, then I started to work on the filters, and this is what I came up with. I actually started out, I think, with like $3 to $100. I did leave the optimization price in here, so I'm $3 to $50. Okay, average daily volume, 10-day, 200,000. I wanted, you know, to do enough volume to where it's tradable. Okay, change in 5 days. I want the change in 5 days to be up at least 5%. So in other words, I just didn't want this move to be catching up from where it fell maybe 2 or 3 days before. So it had to be up 5% over the last 5 days. Change from previous day. This, guys, you want to remember this, okay? When you see change in previous day, the first time I saw this filter, I was thinking, well, wait a minute, don't we already have something like that? Position in previous day's range, why can't I just use that? But it's not looking at today. When you see change in previous days or day, it's taking yesterday's close and comparing it to the day before yesterday's close. So it has nothing to do with today. So it's almost misleading, but just remember it takes none of the data today into consideration. It's only thinking about yesterday's close compared to the previous day's close. So now I'm showing a minimum of 4%. So I want yesterday to basically be up 4% or more. I got a minimum of 4%. All right, so position in the previous day's range. Okay, obviously I don't want the thing gapping up and then selling off. No, I want it below yesterday's high, which would be, remember yesterday's range, the high would be 100%. So I want it below yesterday's high, and then I want it change in 5 minutes to be selling off, have sold off at least 2%. So now I know I have a 5-minute low and it's at least a 2% move. So now I'm talking, people are going to get shaken out of this. All right, so that's pretty much it. And then what I did is I took this, and first thing I always like to do is click into it and see what kind of alerts are coming through. All right, so these are some of the stuff that were coming through today. Okay, HCC. There you see that one. Oh yeah, and I forgot, if you probably saw it, but I didn't start the time until 15 minutes after the open. I don't want to be trading this mess right here. Okay, so I want it to be 15 minutes after. This is a 15-minute chart, but I want it 15 minutes after the open, so I would get that alert, you know, right there at 30.26, and of course, boom, you know, it's bounced up here, went higher. And I'm not going to spend a lot of time. You can see what I'm kind of looking for here. Just sudden moves here. The previous day, you had a big move up, but tried to shake out. This one really didn't work. You know, just, you know, not all of them are going to work. We're going to go into that in a minute. That one pretty much closed flat. But anyway, I'm not going to spend a whole lot of time with this. I'd like to always look in here first and see, you know, see what I got. And then what I'll do is I'll take it and I'll back test it. So let's run the back test, and this is my basic, this is our back testing module, and you have like 5 tabs that you need to go through when you set up a back test. I'm going to give you a little hint here. I kind of already optimized the time. I know I wouldn't have time to do all the optimization, so I left a little bit of it in here, and one of it is time. And the timed exit is 90 minutes after the alert goes off. So basically you get the alert, you buy it, you stay in it 90 minutes. Risk management, Very simple. I very seldom use a profit target. I found that it seems to work best if I just let it play out on time. And I enabled my stop loss for a 1%. So if the trade goes against me 1% after the alert, okay, I'm out. And then I opened it up, and guys, this is important. Columns and results, you're going to be defaulted right here, but you want to set it up to use my favorites. Okay. And if we have time, I'll go into that, but I really don't want to spend a whole lot of time other than what I'm about to show you. All right, so let's run the back test, and hopefully it's not going to be slow. It was, and I do have this already ran over here in case it does drag down on us. So what it's doing is going back and back testing every alert that has come through here the last 65 days. The dollar box was checked. Oh God, I hope not. All right, so I'm gonna double check to make sure, Bill. Well, yes, you're right. This may throw off my this may throw off my you're right, Bill. Ooh, well,
dollar bill.
Dollar bill, yeah, thank you. Dollar bill. Well, guys, I'm not going. I tell you what I'll do. I'm going to put a percentage on here and see what happens. And 1%, and this may just throw off everything. Thank you, Bill. Let's see what happens now. Well, yep, it's definitely throwing off the win rate. Come on, finish for me. Yeah, that's the profit factor is still good, but you're throwing off the win rate. So I would really want to use a bigger percentage than that, since I'm using stocks that are kind of volatile. Oh man, let me try something real quick here. I may have just totally screwed this up, guys, but let's do a 3%. Well, this is what happens, you know, when you eventually I would catch something like that, but well, that's better. It's still at 45%, so it's getting a little bit better. Let me take the optimize one that I did.
But hey, you know what, Andy? People still want it.
Well, well, let's take a look at the optimize.
Don't forget to drop it into the chat once you're done tweaking it.
Oh, I will. Well, you know what, guys, this is what's great. You could take something like this, and I can't tell you, by taking this and playing around with it, you know, those exit strategies and those stop losses yourself, and you can create something. So this is my optimized version. Let's see how this works. And I'm going to show you what I did here, guys. Back test strategy. Well, no, let me show you the configuration. So what I did is I optimized it, and based upon change from 20-day SMA, okay, and I got a minimum of 0 and a max of 80. Change from 8-period SMA. I just try to take things that make sense to me. Like, I know if it's too far away from this 8-day moving average, you know, that just stands to reason that if it's, you know, 70-80% above, it's, you know, it may have a bigger fall to it. But that's the beauty of our product. You can optimize this and not have to figure it out on your own. And the one more thing that I did was change from previous day. I used the 4 as a minimum, but I did not want anything above 60. The optimization told me that my profits started going down once it got above 60. Now let me go in here, and I'm gonna have to change this back thanks to Bill, who I'm so glad he saw that. What if I automated it? Hey, but nonetheless, you know what? It's still, let me show you something. Let's see how it's set up here. Let me show you how it optimized at $1. And then what we'll do is we'll go back and optimize it based on 3% and see what the difference is. Results are results. I don't care how you slice it. Am I not right, Jamie? Let me.
No,
So,
that's true. And instead of me typing a response to Kevin's question, when our AI Holly is doing her thing, and you know what, Steve's much better at explaining this than I am about the out of sample data.
mm-hmm.
Right? So the AI is completely avoiding. Matter of fact, what it's doing is completely, making sure that, it's not just a bunch of curb fitting, right? And also, too, think about it from this perspective. A lot of the back testing systems out there, you cram stocks through the strategy to see if they work. Whereas we create the event and cast it out to the market and then back test that event and any stock that might be exhibiting that event. That's event-based back testing. And then you throw in the out of sample data that Holly folds in there, test it, then takes the out of sample data and puts it to use versus, I can't remember if it's the in sample versus the out of the sample, but there's a huge process going on there. And it's not like these, there were 11 strategies that showed up today. And if you don't know about what's going on behind the scenes with Holly, well, let me give it to you in a very expedient fashion here. These strategies made the cut after the analysis was done, after yesterday's data was folded into our database. Now, there are 45, 50, 40, it's always fluctuating the number of strategies in the base. So these were the only ones that made the cut after all that heavy lifting was done. It takes almost all night to get there. So there is some extremely heavy lifting going on behind the scenes here to get these strategies that show up to produce this statistical viability here. So going back to your comment, Andy, you know what? As long as the results look good and the dollar amount's not too far out of whack, then yes, a result is a result, whether it moves a dollar amount or a percentage amount. Just like with Holly, after everything's said and done, when you're looking at that win percentage column and you see long buyers or buyers stepping in at 73.7%, it kicks out 3 trades and wins 2 out of 3 today, actually underperforms at 66.7%. But hey, that's the whole deal here, is this is giving you statistical probability on every entry.
Sure.
Most people aren't even thinking about that, much less using it, right? So once again, it's the power of the statistical probability. That is Holly's.
Exactly. Exactly, Jamie. And getting back to your question about curve fitting, Kevin, you're right. I do understand curve fitting, and that's why I still have 400 trades in here. I mean, I don't like. I mean, yes, I can dwindle this down to like 70 trades and have an incredible number, but I know I'd be curve fitting this. I really only optimize this based on 3 basic filters. And it was basically the ones I showed you: the change in the 20-day, the change in the 8-period SMA, and one other. I have to go look at it. So, but you're right. You don't want to just keep grinding. And I like to only see things that jump out at me where, it's quite clear to me that the performance drops off after a certain level. In other words, I won't sit here and nitpick, minimize here and maximize there and go through 5 or 6, 7 different strategies. You can do that, and then you are, flirting with curve fitting. But getting back to this, I mean, yeah, once again, I obviously don't want to risk $1 on a lot of these smaller price stocks for sure, but at the same time, results are results, and I'm not going to argue with that. So what we're going to do here, this is the results if you do use $1 as your exit strategy. Now let's go back. Let's just change it to 50 cents. Back test. Let's change it to 50 cents and see what happens. So what we can do is go to risk management, and we're going to change this to 0.5, and we're going to run it again and see what happens. And then we'll come back and we'll do it a percentage, and we'll use like, we'll use 3% again. Because you have to be careful anytime you're using a contrarian alert that's coming down, and you're basically jumping in front of the momentum, keeping it, you know, too tight. Like I was, as a matter of fact, when I ran it the first time, and I was thinking I was putting in 1%, I was going, gosh, I don't think this is going to perform very well. And there you go. That's at 50 cents, and it dropped down a little bit, but still very impressive. You know, 50, almost 55.5 winning percentage, $1.82. And now let's go ahead and do it based on 3% and see what happens. And then I will save it with this last one at 3% and share this with you guys. Okay, we got to change it to a percentage. And once again, Bill, thank you for catching that. Let's put it on 3% and see what happens. It looks like about the same as the, yeah, about almost the same as about the 50 cents. So what I'm going to do is I am going to put this back on, well, I'm just going to leave it on 3% and let you guys play around with it. I still think it's a very good alert to catch, you know, even when I chatted, I was really nervous that it was all going to fall apart, but you still have a nice little trend profit line there. So what I'm going to do is I will save this and share it with you at 3%. Let me put this on real time, okay. And save and share to cloud. And of course, I will jump in here and of course start playing with this more, and maybe next week I can even make it better for you. And if you guys happen to go in and dive in yourself and start playing around with some of the configurations and come up with a really you know, nice profit factor and winning percentage, man, don't hesitate to send it to me. I'd love to see it. Okay, we'll just call it weekend, and dropping the link in the chat window there. All right, guys, it's in there for you to grab. And while you are doing that, I'm going to bring Scott back in. We are going to wrap it up today, guys. And hang on, because Scott's going to offer you guys a discount code.
Yeah, thanks everyone for attending. A couple items. First, the educators here at Trade Ideas have written a nice ebook all about how to keep some strategies in mind that are going to be helpful to you in a crazy market that might be turning into a bear market. So you can download that free, trade-ideas.com/ebook. Jamie and Andy both participated in this. It's a good one. Just you know, check it out. Put your email in, download it. We also have a podcast, new episode coming out tomorrow. I believe we have a special guest coming, so stay tuned for that. Just search for Trade Ideas Podcast in your favorite podcast application. It'll turn up, subscribe to it, and then you can be notified of the first new episode when it comes out tomorrow. Or you can download the previous episodes, like last week's episodes and the other previous ones, and check out the back catalog. It's good stuff. Today, we have a code, IHeartHolly, all caps, is good for the rest of this month because it was Valentine's, so that's why it's IHeartHolly. It's good for 15% off your first month or year of standard or premium. And you can get annual Trade Ideas for under $3 a day for standard, or it's under the price of a lunch for premium. Just, you know, it's another way to look at the value. Go ahead and take advantage of that. If you have any questions, email us, info@trade-ideas.com. You can follow Jamie on Twitter at QuantBot. Steve Gomez, who's on some of the other webinars, is at Today Trader. Follow us on Facebook, etc., etc. Keep in mind that we have a support webinar tomorrow that's 3 hours long that starts at 11 a.m. Eastern. You're going to get an email invitation to that probably about an hour after this webinar ends. And if you have more questions and want to get more answers, go ahead and sign up for that and show up. Thank you, and thanks, Andy and Jamie.
All right. Thank you, Scott. Thanks, everybody. We'll see you
Thank
tomorrow,
Scott,
11 o'clock.
Andy.
See you later.
Thank you, everybody.